Hi everyone, it's Steve here at the Forex Codes, back after Christmas holiday. I've done no trading from about the 20th of December until 8th of January. You should really take that time off. It's very important that you don't trade during that period. And look what happened this time. We had the flash crash with the Aussie yen. A lot of people got taken out of the game with that. So just spend time with family and friends. Relax, get drunk, get laid. I did. Anyway, this is a series of videos. This is the first one. Each video will be on a different one of my indicators. In depth, so they might be a bit long. But this is stuff you need to know. If I was just beginning, I would want to know this. Unfortunately, it wasn't around at that time 15 years ago. I don't use normal indicators. I use what I found that works for me after 15 years experience. Now you're getting that here. So just take the time, get a cup of tea, look and listen to what's being said. Today's indicator is the TFC being Forex Codes, the TFC Candles and Wave. And I certainly hope you enjoy this. Take a look. TFC Candles and Wave. The market's behaviour can be called market cycles. Cycles, as you know, go up and down and up and down and up and down. Be good to know when they're going to do up and when they're going to do down though. We all have transitions in our own moods. Sometimes we're happy, sad, confused, angry, pissed off. The market moves in exactly the same way as our moods, because the market reflects human behavior. This is a big point. Many people mistake and they think that the Forex market is a financial market. No, it's not. The Forex market is a human behavioral market, not a financial market. The market reflects our moods, day to day and even minute to minute. We need a way of monitoring market moods. Let's talk about a happy market as one of the cycles. If we were to translate what a happy market is, I think most would say that a happy is buying and therefore an uptrend is present. Happy market being greed. There you go. Happy market uptrend. Bum 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 bum. Bottom left to top right. Now let's talk about a sad market. If we were to translate what a sad market is, I think most would say sad is selling, and therefore a downtrend is present. A downtrend, sad, whatever you like to call it, fear, represents fear. Here we go. There's your downtrend. And I want you to take this analogy on board. Downtrend, sad. Can you see the candles are all red and below the wave? The third one I'd like to suggest is a confused market. If we were to translate what a confused market is, I think most would say confused is a market that can't make up its own mind. It can't get out of its own way. A sideways market is present in a confused market. And there we have it. The market's going nowhere. The wave is almost 3 o'clock parallel. You've got a lot of blue candles in there. It's a sideways market. So let's talk about the TFC Candles and Wave. Knowing that these cycles even exist and we can put a name to them, we're talking about market behavior, human behavior, and that these cycles reflect the market psychology or moods is one thing. But the key thing is, how do you recognize which one of these cycles is present on any chart? You'd think, well, it's bloody obvious, isn't it? Well, it's not, otherwise you wouldn't have 95% of traders failing, would you? Because if they knew it was an uptrend, they wouldn't short, would they? And vice versa. So how do you recognize which one of these cycles is present on any chart? And I mean recognize at a glance. No messing, just bang, one look. On any currency pair, how do you determine whether people are happy on the 5 minute, sad on the 4 hour, confused in the 1 hour? How can you do that quickly? Look at that particular example. You'd want them to be happy on the 4 hour, happy on the 1 hour, and then as soon as they go happy on the 5 minute, that's when you go long. Correct? That's something most traders really can't do reliably at a glance. 8-year-old kids can. Oh yeah. Show them any of my charts and say, is this uptrend, downtrend or confused? Oh, they'll tell you straight away. They're not putting anything between their ears apart from looking for greens, reds and blues. Which is why the Forex Codes is introducing you to this superb visual tool, the TFC Candles and Wave. I don't think there's many doubters here. Most of what you typically read, see, hear, when you're learning how to trade is material that is complex and trying to dazzle you with complicated terms and sophisticated jargon. Oh, by the way, I'm charging you a fortune for it. It's old stuff, it's old shit, and it gets regurgitated and regurgitated, and people think, until people think it's the gospel. It's absolute and utter crap. Think about it. In reality, the best traders use very simple strategies that allow them to capitalize on the market mood. You got to get the sentiment, you got to get the market mood, because if you're not with that, you're nowhere. The TFC Candles and Wave is a game changer I want to share with you. It's a simple visual tool, as I said, an 8-year-old can use it, that will allow you to read the market at a glance. At a glance. However, not only does it read market cycles and hence moods, but also shows you where support and resistance might be in the trend. This is very important. Now, the colour of the TFC candles is based on the relationship between the close of a candle and the TFC wave. This will become clearer. A candle paints light green when it closes above the TFC wave high. In other words, above the TFC's green line. Again, loads of examples in a second. So just bear this in mind. A candle will paint light green when it closes above the wave high. In other words, above the green line of the wave. A candle paints red when it closes below the TFC wave low, in other words, the red line. So candle paints red if it closes below the wave's red line. And a candle paints blue when it closes in between the high and low, in other words, in between the green and red line of the TFC wave. Right? Those are your three colours. Green is bullish, blue is neutral, red is bearish. Now, I'm going to make this really simple. If it's fucking green, don't sell. If it's blue, sit in your arse. And if it's red, don't buy. Right. That 95% of traders has now gone down to only 50% of losers, if they just listen to that. Now, you might think that's an arrogant statement, but it's a fact. Believe me, after 15 years of watching this, it's a fact. So let's repeat this. Green is bullish, blue is neutral, red is bearish. So right away, at a glance, you know the sentiment and even to a certain degree the momentum and trend, so you could immediately understand the organization of a market at a glance. So, see this candle here? It closes above the high, in other words above the green line of the TFC wave, so it's going to be light green. Yeah, I'll come into the dark green shortly. This candle here closes below the low of the wave, in other words below the red line, so it becomes red. Your blue candles here are because the closes are trapped between the high and low of the wave, in other words between the green and red. Okay, so take a bit of time to look at that and you see it will become clear. The TFC Candles and Waves shows us at a glance the market sentiment and trend. It's important that green candles dominate a market that is moving upwards with higher highs and higher lows. In other words, an uptrend. But green candles dominate. It's also important that red candles dominate in a market that is moving downwards with lower highs and lower lows. Downtrend. Blue candles dominate a market in consolidation or choppy, sideways market. So that's blue candles or quick shifts between the three colours. They're always moving in between the colours very quick. Again, you got a sideways market, you do nothing. And I mean nothing, nada. So there's your uptrend. Can you see all the candles are green? Any blues in there? Yeah, one little one there. All the candles are green, uptrend. Now, there's a TFC wave. We'll be talking about the angle of this wave later on in the presentation, because the angle is important. If you can use a watch, again, like an 8-year-old kid, you can use this. Downtrend. TFC wave going down. And red candles, red candles, red candles, red candles. Starts finishing off there, doesn't it? Then starts again. Downtrend. And of course sideways, lots of blue. If there's lots of blue, just don't bother trying to trade this. There are going to be other pairs where you've got uptrends and downtrends. You've got happy markets and sad markets. Keep out of confused markets like this. Okay? But as I said, candle closes above the green, above the high, goes light green. Candle closes below the low of the wave, the red. Candle is red. Candle closes in between the green and the red, the candle will go blue. Blue is neutral. Okay? Okay, let's talk about the colours of the candles. The upper bars and the down bars will dictate whether the candle is painted light or dark colours, that is light or dark green or light or dark red, depending on if the bar is approaching or moving away from the TFC wave. Again, I'll show you this in a second. So if price is above the green line, in other words above the wave, and price closes higher, you're going to see a lighter green colour. If price is above the green line of the wave, but the price closes lower, in other words the close is lower than the open, in other words it closes closer to the wave, then you will see a darker green candle. Now this darker green candle would be red under the normal Japanese candlestick system, because if a candle opens and then closes lower than it opens, it goes red, doesn't it? We don't use that if the candle is above the wave. We just use the fact that you'll get a darker green candle if it closes nearer to the wave. You get a lighter green candle if it closes away from the wave. It's because when people see red candles and they're long, it scares traders out of long trades. So the idea is to keep you in trades longer. Let's have a look. There you go. The candle is above the green of the wave, above the high of the wave. Therefore, it's going to be green, yeah? Now, if the close is higher than the open, it's going to be light green. Light green, light green. Close higher than the open. However, this candle, it opens here and closes here. So the close is lower than the open, hence it's dark green. In other words, it closes nearer to the TFC wave. This one opens there, closes there. In other words, the close is lower than the open, hence it's dark green. Or another way of looking at it is, it closes nearer to the wave, therefore it's dark green, like that one. Here, of course, the open there, the close there. It closes away from the wave, so it's light green, light green, light green. Here you can see price slowly going towards the wave, and you get quite a bit of dark green then. Does that make sense? Can you see as well, and we'll move on to this later, how this wave gets respected? Acting as support. More on this later. Acts as dynamic support. It acts as dynamic support in this case. 3 times. So that explains the long candle colours. From the opposite, if your bar is moving away from the TFC wave low, so if price is below the red line of the wave, in other words, below the low of the wave, and price closes lower, in other words, away from the wave, you see a lighter red candle. So if a price is below the red line of the wave, but price closes higher, in other words, it closes higher, closer to the wave, you'll see a darker red candle colour. This time, the close is higher than the open, which of course will be green under the usual Japanese candlestick system. However, when people see a green when they're trading short, it sometimes scares them out of trades. So look, open, close, below the red line, light red. Open, close, lower, below the red line, light red, or red if you like. Open, close. It closes away from the TFC wave, therefore it's light red. Just like a green bar, when it closes away, higher away from the TFC, it's light green. Now you'll notice this, opens here, closes there. So that closes closer to the wave. Still below the wave, so we're still in the trade. And that's dark red. And normally that candle would of course be green. And that candle would be green and might scare people out of trades. But we know that if the candle is below the red line, below the low of the wave, we're still short. And of course, next candle opens there, closes there. It closes lower. In other words, closes away from the wave, as does that one, as does that one, as does that one. And that's what shows right red. In fact, light red. And those close higher, open lower, close higher, so they're dark red. I hope that's pretty simple. And candles that close within the red and the green are blue. Right, neutral. Take your time to have a look at this. Don't just race through this. Take your time, have a look at all this. In conclusion, if the candle closes away from the wave, then it's light in colour. Okay? And that's the direction you want it to be going. You want light colours, because if you're long, you want the candles to be light because they're moving away, long. If you're short, you want the candles to be light red, moving away from the TFC wave because you're short. Have a think about it. If the candle closed towards the TFC wave, then it's dark in colour. Okay, the next topic is trends and clock angles. So, can you read a watch? Okay, let's now talk about the angle of the wave. We can't just trade wishy-washy just because price is above the wave and the candles are green. You can't just suddenly go long. We want to look at the clock angle. Now, clock angle between 12 and 2 indicates a strong move upward. Uptrend, happy mood. When the TFC wave is at a clock angle between 4 and 6 o'clock, it indicates a strong move downward. Downtrend, sad market. So think about the wave between 12 and 2, uptrend between 4 and 6, downtrend. Anything else, we don't trade. When the TFC wave is at a clock angle of 3 o'clock, that means just about parallel. It indicates a sideways move, confused market. Let's take a look. Uptrend. Mark the angle between 12 and 2. You'll find these every single trading day. Okay? Every single trading day, no matter what time frame, anything from 1 minute to 1 week, you'll find these. Downtrend, sad market if you like, you can see there between 4 and 6 o'clock angle. So if you can tell the time and look at a watch, 8-year-olds can, you've cracked it. It does correct itself here, and it also disrespects the wave there. So whether you'd get in lower down, it's possibly debatable. Although once I get the 1, 2, 3 down there, then I'm more likely to go back in there once it's retested from the downside, the wave. Anyway, we're not talking about that. We're talking about the angle of the wave between 4 and 6. And here, of course, your wave lines red and green are parallel, or 3 o'clock sideways. In sideways markets, we do nothing. Okay? We sit on our hands. In conclusion, there are 3 angles you must know. Only 3. An uptrend is a 12 till 2 o'clock angle. Happy market. A downtrend is a 4 to 6 o'clock angle. Sad market. No trend is a 3 o'clock angle. Confused market. This is important. Also, it does you no good to see a strong uptrend on a 15-minute chart. Happy. When the trend on the 60 and 40-minute charts, a downtrend, downward, sad. Mixing of time frames, not very good on any indicator, not just the TFC candles and wave. Reading the clock angles should be very simple. What I mean by that is you should be able to see it at a glance. If you're thinking, is it 3, is it 4, is it 5, you know, then it's not simple, which means go on to a different pair. Get my drift? It should be just like reading your watch or looking at a clock. Yes, I see what time it is. If you're and ahhing, go on to a different pair. If it's not something that you can see at a glance, now you'll see it when you look at my other videos with my other indicators. There's a lot of this at a glance. Funnily enough, I think the Japanese for that is Ichimoku. That's another story. So if it's not something that you can see at a glance and make that determination immediately, go to another time frame, or another currency pair. Simple as that. Hope you're beginning to get this now. There's no difficulty in it. It's there or it's not there. And what a lot of traders do is to try and put something there that's not there. It either is or it isn't. Now, we get to the nitty-gritty. A good trend in the same direction on all the charts and all the time frames gives you the best possible probability of a profitable trade. Once you've got a good angle on both the 30-minute, the 60-minute charts in the direction of the established trend, you can then wait for a corresponding angle on the 5 or 15-minute for your entry point. So you might have a good angle uptrend on the 30-minute, the 60-minute. Your 5-minute is just turning or whatever. So as soon as you get the corresponding angle on the 5 and 15, you've got an entry. If the trend is up, you want to buy when price pulls back to the green line. You're going to get best price that way rather than just try and completely buy the breakout. Let it pull back to the wave. If we're talking uptrend, let it pull back to the wave. Let the next candle go light green, then go. If the trend is down, then you want to sell when the price gets to just above the red line. In other words, get the pullback or the retracement back to the wave. Don't just buy the breakout, because you get it at a better price. Here's what I mean. Here we got the dollar chef 30-minute. You can see we're starting to get the 12 till 2. This is recently 11:30 GMT. This is the 30-minute. You've got the angle. But that's on the 30. Now if we go to the 5-minute at the same time, even within half an hour if you like, 5-minute, now you can see price has pulled back to the green line. The angle, the wave is smooth. It's getting established. It's been respected. So anywhere here off the green line is your green candle, your light green candle. You could go along on the close of that, providing other things, that's other indicators agree, but that's a different story. And you can see you could have picked any time to get in there. So we're talking about 30-minute and then 5-minute going in that direction. Let's have a look at the SAD market. The angle is 4 to 6 o'clock. It's come down, retested the wave, gone again. Now you could have took the close of that candle to go short if you want. I've taken it a bit lower. So that's the 1 hour time frame euro yen just before Christmas. Let's go down to the 15-minute at the same time. 13:30 15-minute. Now as you can see on the 15-minute, the price has pulled back to the wave, to the red line. Can you see how that, it's just amazing how often this happens. You can go short at the close of that candle. You've got the correct angle, it's smooth. It's been respected here and down it's gone. That's an 80 pip short trade. Now I'm one of these OCD guys. I very rarely keep trades on for 80 pips. I'll be scratching my nails on the table. But it was there if you wanted it, for those with more patience than I've got. So can you see 1 hour and 15-minute we're looking for the entry. Both have got 4 to 6 o'clock angles, both are smooth, both have got clarity, and the 15-minute has pulled back to the wave, and then I'm away, I'm short. Pulls back again, look, down, pulls back again, down. These are no accidents that the wave acts as resistance here, and away it goes. Okay, moving on. Now, don't just follow this video and think, that's interesting. Study the video, in other words, go back, look at points, things you're not sure about. This is a lesson, albeit a long lesson, but it's a lesson. Right, dynamic support and resistance. Support and resistance can also move along with price. In fact, you've seen that. And we call this dynamic support and resistance. Moving, if you like, moving support and resistance. Dynamic. Dynamic support occurs in an uptrend. Dynamic resistance occurs in a downtrend. And they can be identified using the TFC wave. In an uptrend, I'll expect support to hold at the wave and resistance to be broken. In other words, higher highs, higher lows. Would you agree? In a downtrend, I'll expect resistance to hold at the wave when price pulls back to the wave, and support to be broken. Lower highs, lower lows. In a wide range sideways, I'll expect exhaustion at the range extremes. And I do sometimes trade sideways markets, but this is a different kind of trading with different indicators. Okay. The TFC wave acts as dynamic support. Take any chart and have a look. Look here. Comes down to the wave, off it goes again. 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 Dynamic support. And the wave acts as dynamic support, and then it can get in again, and then it can get in again. If you've gotten out, as soon as these go light green again, get in. Light green again, get in. Light green again, get in. The wave has clarity. What are the three clarities? Smoothness. It's established. And the wave is respected because it acts as support. In other words, respected, the candles don't go through, close through the red line, the low of the wave. So that's dynamic support. Important. The TFC wave also acts as dynamic resistance. Here we go. Holding as resistance there, comes down, back up to the wave, resistance, back up to the wave, back up to the wave and off, back up to the wave and off, back up to the wave and off. These are no accidents. And again, do we have clarity? In other words, is it smooth? Is it established? Yes. And is the wave respected? Yes. The wave acts as dynamic resistance. Would you agree with that? Well, there's your sideways range. Clusterfuck, as we used to say in the army. Definitely dangerous to trade in that kind of environment. Right, you've heard me talk about clarity. There are three aspects to clarity. Smoothness. Well, first you've got to have the angle. But once you've got the correct angle, 12 to 2 o'clock in an uptrend, happy market. 4 to 6 o'clock in a downtrend, sad market. Once you've got the angle, there are three aspects to clarity. Now, once you start using this, it'll be like opening peas out of a pod. But I don't want you to just willy-nilly take green candles above a wave and just trade. It's just not going to work. Things have got to be right. And the thing is, this video's taking time, but you can see it at a glance, can't you? When you get used to this and have a look at 30 or 40 charts, you've got it. You'll see it at a glance. So the wave has to have clarity. Once we've got the angle, does it have clarity? And the first aspect of clarity is smoothness. So the clarity of a TFC wave is important and is gauged by 3 criteria. First one being smoothness. Once you've got the angle, the wave should be smooth, reflecting normal volatility, as opposed to any gaps, any big candles up and down, any long wicks, and very little blue. So we want a smooth wave. There you go. Smooth. That's smoothness as opposed to not smooth. This has got lumpy bits in it. It's got large candles up and down. It's got long wicks. Can you see it's there? Look at it. It's like lumpy porridge, isn't it? There's smooth. There's not smooth. Big difference. If you get not smooth, go and find a different time frame or currency pair. Right, number 2. Is the wave established? The TFC wave should be established rather than in transition from one angle to another. If it's just in transition, it could transition back the other way again, couldn't it? So, is the wave established? Once you get down here and up here and it comes back and tests there and comes back, that's established. It's also smooth, but that's established. Even if you're going short there, you've got an established wave, haven't you? As opposed to not established. When it's not established, the wave's going up, it's going down, it's going up, it's going down. Look, starts to come down, goes back up, starts to come down, goes a bit more level, comes down again, goes up, comes... Surely you're going to be trading that rather than trading that. And this is also not smooth, is it? And it's wide. I've not actually put that as a point on here, but I prefer narrower waves. When they get wide, I get very nervous. So it has to be established. Finally, respected. Number 3, respected. The TFC wave is respected when the trend corrects to the wave without breaking through the opposite side. Within the context of an uptrend, price trades into the TFC wave without breaking lower than the red line of the wave. Right? You could say without closing lower than the red line of the wave. I may change that. Depends whether you want to be conservative or aggressive. That's up to the individual trader. What do we mean by that? Respected. Dynamic support doesn't go through the red. Comes up, dynamic support. Comes up, dynamic support. Comes up, dynamic support. The wave is respected because price doesn't close below the red line. So you've got smoothness, established, respected. Right? You can join it here, you can join it here, you can join it here because it's respected. Not respected, well, hey, respected it there. That is a long wick, but it doesn't close through it, but then it goes through, then it comes back, disrespects it there, comes back, disrespects it there, comes back, disrespects it there. So you got nothing, have you? You haven't even got smoothness. It's not established, and it's certainly not respected. Can you see the difference between that and that? And look, you got these big wicks and big candles, and it's miles away from the wave, then comes back. I'm not that worried about that, although I prefer a gradual progression like that rather than whack, whack. So in summary, the clarity of the TFC wave is important and is gauged by 3 criteria. Smoothness. Once you got the 12 to 2 o'clock happy, 4 to 6 o'clock sad angle of the TFC wave, once that's been identified, the wave should be smooth, reflecting normal volatility rather than gaps, big candles, news events, long wicks, and very few blue candles. Number 2, the wave needs to be established rather than in transition from one angle to another. If you've got the first bounce, the first pullback, and it's off again, and the angle's right, you're halfway there. The wave needs to be respected. In other words, it needs to have acted as dynamic support or resistance. The TFC wave is respected when the trend corrects to the wave without breaking through the opposite side. Okay? You thought this was just going to be, it's green, go long, it's red, go short. Well, you can do, and you probably get away with it, but if you want to do the job properly, look at the clarity of the wave. But in the context of an uptrend, prices trade into the TFC wave without breaking the lower than the red line of the wave, and vice versa. So you can't just trade any old TFC wave. Okay? And very important, the TFC wave, the TFC Candles and Wave, can be used on any time frame, as I'm going to show you. Any time frame. So those are the rules for using the TFC Candles and Wave. However, it's not a standalone indicator. And I use it in conjunction with my other indicators, as I'm going to show you shortly. I use it with the TFC cloud, that's the Ichimoku cloud, set to certain specifications. I use it with the TFC tricks. Now I'm doing individual videos on every one of these. Just remember, these things take time. I use it in conjunction with the TFC squeeze. I just love the squeeze. I use it with the TFC ADR dashboard, average daily range dashboard. The daily ranges are important. And I use it with the TFC volume indicator. So there's a combo of these. But I'm not using any of those until I've got clarity of the wave, of the TFC wave, okay? And the candle is in the right direction and so on. That has to come first, and then I'll look at the rest of my indicators for confirmation. A confluence of events. Conjunction with, confluence. Finally, price action. I might have everything showing me to go long, but if I've got a massive resistance line, I'm going to wait until that's broken, as an example of price action. Once my indicators are in confluence, I pull the trigger. Now, because mine are all color coded, I can see stuff at a glance. For long, everything's got to be green. If there's one item that's red, bong, no trade, next. It's that simple. I don't want to spend an half a day thinking about when I'm going to pull the trigger or not. I can see straight away. Now, before we go on to look at some charts randomly, in conclusion, always remember that you're measuring human behavior and opinion as it is reflected in the market. It's not a financial market, it's a human behavioral market. So I hope the idea that I put across in this presentation of market moods and the idea that we must have a way to measure them is an idea that you feel important and that you might want to grasp. The TFC Candles and Wave can take any strategy you have now. So if you've got a strategy, just plonk the TFC Candles and Wave on top. And it can make it better because you'll be applying your strategy to the correct market cycle. Does that make sense? So let's go to the live charts and take a look. This is completely unrehearsed. I'm just going to blast some charts from different time frames and we'll have a look at clarity of waves and angles and you name it. So this is going to be the final part of the presentation. Just some random charts. Here we've got the pound dollar 4 hour. This is a 4 hour chart, not a 5 minute chart. So people think this is just for 5 minutes in day trading. It's not. Here's a 4 hour chart. Now you can see trends start to change here. Price comes up, comes back to the wave and goes again. So there it respects the wave. The wave acts as dynamic support. Rises again, comes back to the wave. Again, the wave acts as dynamic support. The wave is smooth. It's getting the correct angle. Does it have clarity? It's smooth. It's now established. And it's been respected twice. So provided my other indicators say so, as soon as this candle closes light green, I could go long here. What else is happening at that time? Let's have a look. At that time, my TFC cloud indicator hasn't gone green yet, so I'm not taking a trade on the 4 hour at that time. I may go down to the 1 hour and find a trade there, okay, where everything's green. Now on the next candle here, my clouds are green, my tricks is green, the fast tricks, but the other one's red. Now aggressive trade is to go along there on that break. Conservative trade is to wait until both tricks are green. Now if we're just talking about the wave, you're fine there because you've got clarity and you can go along at that close. But I use my other indicators too. So everything's green here, but I wouldn't trade the top of there. I'd wait for the pullback and then get it when it goes green again. Can you see the opportunities you've got? How many times it come back and hit the wave and respect the wave, and every time it goes light green you can go again? Yep. If you get a situation like here, for example, where this was not quite green but everything else was green, I'd go to a lower time frame. So that's a 4 hour. Let's go to a 5 minute. Pound dollar 5 minute. Now I wouldn't like this because of that massive candle and it has to come back to the wave. That's not my scene. To me it's not smoothness of a wave. Here however, we've got the green, comes back to the wave there. So once it comes away again, you can go along there. Does my other stuff agree? Yes. All 4 TFC clouds are green. Both Twixes are green. and I've had good volume here with green, so I can go along here, and you know that's worth 50 pips at best. We've got the angle, established, clarity, and so on. Right, here's my TFC Cloud dashboard. Let's have a look at the euro. Now the euro spent all morning sideways. Can you see? And it hadn't done very much of its range. It had done about 34 pips. The average is a lot more than that. So we get the break here through the support. Now everything here, I've got the squeeze, I've got the tricks red, I've got all the 4 TFC clouds are red, and we get the breakthrough there. So to me, close of that candle is a short on the 5 minute, because everything I've got is red plus the squeeze. Now I've taken that as a breakout rather than a return to the wave, because that just moved too fast. But all my other indicators got it, and we started getting the angle. Okay, let's have a look at some others. Aussie dollar 5 minute. Now you can see here you've got sideways, then it moves up, respects the wave. Look, we start getting the angle. See how it comes back there. The light green candle there is a go for me. What else we got? Can you see at the time that is red, the 5 minute cloud? So I've got to wait to there. So I've got to wait to there. And at that point, which is here, the break of that Davos line, the break of that line, I can go along, and I've even got some volume here, the green bar. So what's that worth? Not a fortune. 10 pips. You could have got in earlier at this one if you're just purely going by the establishment and the clarity of the wave, and you'd have got more from the top of that green there, light green. 15. Okay, how do we deal with a change of direction, change of trend? I go for 1, 2, 3s. 1, 2, 3. Once I see 1, 2, 3 and then it comes back below, then to me it's fair game for a short. 1, 2, 3. But everything doesn't go red here until here. Can you see? They go red, tricks goes red, that's red, and you got some decent volume. So round about the break of that low, I can go short. See how the angle's changed on there? I can go short. What else have we got? Oh, dollar yen, don't like that. That's and back. That's not smoothness. That's awful. Maybe you get a bit of clarity here towards the end. Yeah, you do. So it comes back to the wave there, and then goes light green again. You can go along there. Nothing wrong with that, which is somewhere around there. 10 pips again. Not brilliant. So have a look. Dollar CAD. Dollar CAD. We get a change of trend here, green, comes back to the wave, goes up, comes back to the wave. So your angle is starting to go towards 12 to 2 as it goes up here. It's been respected. The wave is smooth, and the candle here, the light green candle, tells the story. At that point, say there, Everything is green, as you can see. Look down that line. You've had a green volume and you've had two blue volumes, which is good signs for longs. So the break of there, 62 pips. Not many pullbacks. This is quite a strong trend. But you've got it there. It pulled back there, it pulled back there. You got your green, you can go. It's like a different time frame. 30-minute. Can you see on this 30-minute, and this is like for a day and a half. This is a 30-minute chart. Just sideways market. Then you get the breakthrough. This is a long candle which takes out all the lows. See? All your lows are there. 30-minute. On my stuff, you can see all four TFC clouds have gone red. Matrixes are red, and I've got red volume at the bottom. That's fine for the short. You're not going to get a pullback to the wave. This is more one of those breakout ones. So this is 15:30, 9th of Jan. Let's go to the 5-minute, same pair, same time. 15:30. Now we've got a squeeze on. Fires to the downside. Everything goes red there. So you could be going short. You've got loads of red volume. Look at the bottom volume, TFC volume. Loads of red volume. Everything is red. Can you see how the wave starts getting smoothness and the correct angle? So I'm looking to go at the breaker there if I'm trading the 5-minute, which is at 16:30. Everything is spot on. Even more volume. Can you see? Doesn't go back to the wave, but it does turn into a bit of a flag formation before it starts to go again. Here's the euro pound 30-minute. See, I don't like this wave. Can you see it comes up, bounces off again, so you may have got a small trade there just on the way, but you wouldn't have done on my system because that's red. But you can see how the wave is disrespected there, it's disrespected there. It doesn't have clarity. Even though it does work, and it goes up again here, along with that squeeze, I might not have traded it because of the disrespecting of the wave. Disrespects the wave again there. So it's not clear, is it? That is the point I'm making there. Here's gold 30-minute. Changes direction. Bounces off the wave here. Comes back. Dynamic support. Dynamic support. Nice. That's gold 30-minute. Dollar chef 4-hour. Wave turns. Is respected there, is respected there, respected there. Can you see? Higher highs, higher lows, respected there. And you're getting smoothness. It's established. As soon as those tricks go green again, I can go. Breaker there on my system. And we've got a squeeze forming at the bottom. And again there, we can go again, all green at the bottom. Wave respected. Lots of pips to be made, even if you're getting in further up. Well, I think that's a lot of examples. And you can play around with this all day and just look. Anywhere on your chart you can see respect, disrespect, you can see clarity, you can see smoothness, you can see 12 to 2 o'clock angles, you can see 4 or 6 o'clock angles. Oh, let's have a look at the let's have a look at a 1 minute. Look, 1 minute. See that? All the way up until it disrespects there. On my system, I've got a squeeze there. Everything's green from there. So as soon as I've had the first retest, I can go along anywhere there. Same there, look. Retest, retest. Smoothness, clarity, and everything down here is green. That's trading, 1 minute chart. Any other 1 minutes? Let's have a look. Oh. There. Can you see? Can you see? Can you see? This is Euro Chef 1 minute. Can you see? Can you see? Gets disrespected there, so it has to establish itself again after that, which it does. Very good. And I would catch this there when they squeeze, and anywhere along there, because everything's green, isn't it? That's an example of a 1 minute. So look at Euro, at dollar CAD. There, comes back to the wave, comes back to the wave, comes back to the wave, see? Here, 1, 2, 3, down. 1, 2, 3 is very important for me, with changes of direction. So you got the squeeze there, you got the squeeze there to the downside. Everything's red there. It's respected there, respected there. Great trade to the downside. Just on the 1 minute, wherever you're taking it from, 14 pips on a 1 minute is not bad. So we've seen all sorts of different time frames. Just slightly goes through there, doesn't it? It takes screen time and it takes practice, but you can see at a glance. That's being respected. Yes, you can go along. Being respected. Yes, you can go along if you've got out. But there's no reason for you to get out. My squeezes tell me when to get in as well. See, I'm long there, along with the wave. I'm long there, along with the wave. That green, light green candle there. One more. Euro pound. That's quite nice. Up, down, and I've got squeezes here, squeeze there. Disrespected that, so I probably wouldn't touch that afterwards. One more. Aussie yen. Beautiful there. 1, 2, 3. Axis support, goes up, axis support again. And I'm looking for everything green here. See this red tricks? That will keep me out of this trade until here. And then we start getting the squeeze look. So as soon as that comes light green again, I'm in. Quick 1 minute trade. It's just scalping, isn't it? Right, folks. This is a long video, but I hope it's been educational. Take your time with it. These videos take a long time to produce, believe me. So please, spread the word. Oh, before I forget, I don't trade during Christmas holidays, so I'm at the 20th of December up until about the 8th of January, nothing. Take time off, as I said. Looking at the TFC profit report for this week, I've got back into trading this week, 8.65% up this week. Now I'm not saying it's 15 years to get to this stage, but you can make money using the Forex Codes systems. Today, just over 2.5%, but I did have a losing day. But I'm very pleased with that for the first week back. I like to have a good first week back when I can. So finally, I'm going to be doing individual videos for each individual Forex Codes indicator, and then a final one for them all put together and the whole template. I won't release any of these indicators or templates until all these videos are done. Forex trading takes patience, and I want you to have the patience to study this and go through it. Please share these videos. Let your friends or other Forex traders you know on other groups and forums, let them have a look at this. Please like the videos and please subscribe. And you can see we've got Instagram, we've got Forex Codes, and the website's halfway finished. Hopefully in the next 5 years I'll get it 3/4 of the way finished. Okay folks, see you in a couple of days. Thank you.